Good morning, traders and investors, and I want to wish everyone a happy Friday. It's August 4th. Feels like July 4th, right? A holiday, but summer's almost over. I think kids are going back to school next week or the week after. Don't ask me where the summer has gone. Now, it's about 7:47. The market's going to gear up to open up in about an hour and 40-something minutes to give, actually, let's see here. No, almost 2 hours, hour and 40 minutes. I'm doing these videos nice and early for you, my goodness. So as you can see here, the Nasdaq's up about 20 points, the Dow's down about 17 points, and we have a lot to talk about. Before we get into this video, and I can go deep, I want to make sure you like this YouTube channel, the YouTube Wealth Press channel where I post these videos. Subscribe to my Telegram channel. It's rogerscott.com/Telegram. Most importantly, I've opened up my VIP room for the summer for free for everybody. You get the second part of this video live, and you can ask me questions. Today's Friday, so it's happening at 11 a.m. Eastern Time. Make sure you're there. You could find the link above or below this video. And also, lastly, post comments below this video if you're watching it on YouTube. I want to respond to you. I want to know what's getting you hot and bothered. Anyways, let's get into today's session. So as you can see here, the Nasdaq's up about 18 points. The Dow's down 16. This is randomness, and I mean randomness. The big concern right now that I have a couple of big concerns. First of all, my major issue is with the implied volatility. Yesterday, you had Amazon and Apple come out. Those are the big players. Today, you don't have too many. You have Nikola, ENBD. As far as I'm concerned, earnings are about 75% over, and we could start finally trading. Now, one of the most important things I want you to see is where the Algos have been doing their hitting. The Algos have been very bearish, and you could see these bars here. You could tell this is Algo trading right here, 100%. These big bars, intraday bars, typically mean Algos, and they seem like they have a little more to go. Now, why are they beating up utilities? I'm going to give you a lesson right now, and I've explained this in my VIP room many times. So utilities and bonds compete for yield. When treasuries are being sold off, interest rates gets higher. When interest rates gets higher, investors tend to put their money away from utility stocks, because why do people buy utility stocks? For dividends, right? I mean, they don't buy them for the high-flying gains, right? So there's less safety in utility stocks because utility stocks produce less interest. So as interest rate gets higher with government bonds, utilities go down. As interest rates get lower in the government bond, utilities get higher. They're more interesting, right? 4, 5, 6, 7%. So the point is, when bonds go down, utilities go down. So the two sectors that have been hit really hard this week was the bond market. I mean, look at this. After the downgrade by Fitch, I think they're called Fitch. This is crazy. From 99 to 95, this puts a lot of pressure on the stock market. And it also puts a lot of pressure on utilities, because if interest rates, remember, there's an inverse correlation between interest rates and bonds. So if bonds go down, means interest rates go up. If interest rates go up, means utilities go down, because investors are putting their money, they're taking their money out of utilities and putting them into higher rates with the government, or they don't have to worry about market risk, right? Makes perfect sense. So the two algo hit sectors are definitely the treasuries and the utilities. Now, we've got bigger fish to fry, and this is going to be really important. So I want to show you something. Now, here's where we get to a crossroad, and this is where market expertise really comes in. So I want to show you something interesting. You're not going to find this anywhere else, so pay attention. So Amazon came out with really positive numbers. The stock is up. This descending triangle, which never really broke down. I said it was breaking down, but it didn't break down, rallied hard, right? So Amazon is the leading stock in consumer discretionary sector. And as you can see here, consumer discretionary is looking really good, even though it broke down. Now, I'm not done yet. This is the XLK sector. This is the technology sector. And the biggest stock, which is down, and it did break down. Now, the biggest stock in the technology sector is obviously Apple. Now, don't get into a debate with me that Amazon is also a technology stock and Apple is also a consumer discretionary stock. I know. Tell the people making this up. But the problem is you don't have Amazon in XLK and you don't have Apple in XLY. So you could say that Apple is the technology sector, XLK, and what was I saying? And Amazon is the consumer discretionary sector. Now, as you could see here, Apple's down about 2.5%, give or take about 5 points. But Amazon is up. So it's pretty likely that the XLY is gonna rally, right? Or at least open up, even though it's breaking down. And XLK is going to undoubtedly go down because Apple had bad numbers. But here's the big problem in all of this. So you see how Amazon has one sector, consumer discretionary. And by the way, the correlation between consumer discretionary and technology, it's about 85-90%, which makes this puzzle even more complicated. So the question is, you have the QQQ. And the QQQ is the Nasdaq 100. And the Nasdaq 100 has, let's take a look at both of them. It's got 11% of Apple, and it only has 5% of Amazon, right? So even though Amazon is up 9%, Apple has a lot more weight in the QQQ. And we all know that the relationship between the QQQ and consumer discretionary and technology is about 90%. Now that puts us in a pickle, right? So is the Nasdaq going to follow Amazon, consumer discretionary? Are they going to rally today? Or are technology stocks going to go down? And that's the big problem. And that's the issue that I have with this QQQ. You can't make heads or tails out of it in situations like this. So I'll tell you what I think. I think because Apple is the bigger player, and I could be totally wrong. I could be completely wrong. I think it'll pull the market down because it has more pressure than Amazon. And as you can see here, Amazon has less market cap than Apple. But it's a very interesting situation when you have the biggest stock in the consumer discretionary sector opening up 9%, and then you have the biggest stock in the tech sector opening down 2.5%. It really puts things in perspective. And then what the hell does the QQQ do in all of this? It'll be very interesting. Let's look at chips. Let's see what chip stocks are doing. Chip stocks are down. SPY is barely up. Yeah, I would say, in my humble opinion, I think Apple will take the lead here and take control. But it's a very interesting scenario that we're in, because one stock controls technology, the other stocks controls consumer discretionary, and one is up like crazy and the other one is down like crazy. It's going to be a very, very interesting day in the market. But I wanted to point that out to you to show how screwed up things can be and how ironic things can be sometimes. So strong. Now here's, I love these reports. Now, here's a report that's supposed to talk about the U.S. stock market, right? Apple is the biggest stock in the U.S. stock market. Do you think this report mentions that it's down this morning? Not till we go all the way down here, pre-market. One little line. Look at Amazon. Do you think they're trying to get the market more bullish? Amazon surged over 8% in pre-market. Yes. And where's Apple? Oh, we have to go all the way down here. Isn't Apple twice as big as Amazon? Anyway, but I want you to show profit taking. They never say loss taking on Wall Street. Anyways, I have a lot of beef with all of this, but it's interesting how they put the stock that's up, but they don't put the stock that's down right underneath it, considering it's only the biggest stock in the stock exchange. I sure have a lot to say today. Let's talk a little bit about the analysis. Strong results from retail giant Amazon boosted sentiment, but as you saw, Apple is sure taking a lot of air away from that. We're waiting for the non-farm payroll report that's coming out at 8:30. I don't think it's going to have that much zest in light of what we're seeing with the economy right now. Interest rate scenario is kind of baked in right now. Amazon did surge, but let's see how it trades after the open. Energy stocks gained ground again. Jobless claims were fine. They were in the low 200,000. Nothing to talk about there. Now expectations for the S&P are only down 5%. They went down as far as I think 8.3 or 8.5. So that's good. Today, we're going to be looking at the non-farm payroll, not expecting anything crazy there. Travel and leisure stocks advanced on Friday, while media and real estate stocks underperformed in Europe. China closed higher as sentiment improved after the government promised additional stimulus measures. China Top Economic Committee announced that the government would implement more measures to stimulate consumer spending, which is so good for us. Enhanced local liquidity through specific deals were not provided. Well, I'll see it when I believe it, but China getting bullish is good for us. Japan chip-related stocks gained ground on Friday. Today's going to be a very interesting day because of this dynamic between Amazon and Apple. Now, here's the big problem. We're still breaking down we're still in a breakdown mode on technology, and we're opening down at right here. So as far as I'm concerned, we're breaking down. The QQQ is lower. My suggestion to you, if you really want to get a good sense of the market, is keep an eye on Amazon. And if Amazon starts giving up and filling this gap, it's a pretty big darn gap. If Amazon starts filling this gap, it's going to be very, very bad, because it's going to put all that pressure on Apple, and Amazon's not going to be able to take anything off of it, okay? Really, really, really important. So I want to make sure you keep an eye on that. Also, keep an eye on the broader market, on the QQQ, because if the QQQ goes down, you already know which one is losing. The bottom line is we're now trading below this area. And when I looked at some other big cap stocks like Microsoft, which I really liked, I wasn't very happy with what I saw, because it broke this level. Hasn't broken this level in quite some time. And look at this pullback. That's a big pullback. We haven't had that level of a pullback in quite some time. So that's making me very, very nervous. Now, I hope I'm wrong, and I hope that Amazon takes the lead and Apple conforms and comes up and the market rallies. But technically, with these descending triangles breaking down, I'm just not seeing it. So again, I hope I'm wrong, but it'll be very interesting to see the battle between Amazon and Apple. Now, at the end of this video, I promised to give you some small cap stocks. Here they are. Tupperware, they had some restructuring plans. The stock is only up 58% right now. Remember I said day trading stocks? I meant it. AAOI, I think it has earnings. The stock is up only 20%. These are great fading stocks and potentially momentum stocks, because sometimes they rally and then they don't do anything. This one's up 20%, AHI, and to the downside, we have ASRT. Sorry, I'm going a little quick. You may have to rewatch this video, but these stocks are great day trading stocks, because when a stock is up 20, 30, 40, 50% or down 30, 20, 30%, and they're small, they can really move. And I know a lot of you guys like those movements right now. Now, before I let you go, folks, I hosted a live bootcamp on Tuesday that I believe was one of the most content-rich, important workshops of my career. And we still have hundreds of traders who weren't able to attend. So guess what? I'm doing it again. I'm doing it at 1 p.m. Eastern Time. Here's what you can expect to learn. The 5 most popular indicators, the M-spike and how to spot it on your charts, the research behind the M-spike, a list of the top 12 performing tickers for the M-spike, the M-spike bull versus the M-spike bear, and the 4-day flip strategy. And here's the cool thing. I'm going to show you results of how this indicator did in 10 major indices and in 12 stocks. And when you see this without any curve fitting out of the box, it's explosive. Win rate between 70 and 80% on over 150 trades for each one of them. You really have to see it. It's worth its weight in gold. It's the only indicator that can outperform the market a factor of 2 to 3 to 1 out of the box. I've never seen an indicator that could do that. This one can. All major indices, bonds, gold. It's amazing. I made it because I got sick of all the crap that's out there. It's action-packed session. I hope to see you there. Click the link below, RSVP. Become a better trader. Become more confident in your trades and use it as a backup filter. It's great for what we're doing right now. Have a great, great weekend. Remember, post comments and feedback. I have all weekend to respond to you. My wife and my 2 daughters are in New York. It's me, Clyde. The dogs aren't even here. It's me and the cats, and I need something to do for this weekend. Have a great weekend, and I'll see you on the other side. Bye.